Welcome to this second seminar. Mark's in Chiang Mai, I'm in Koh Samui, and I'm now going to try and get onto the chart of FTSE. Now, what we're seeing here is a chart. Just need to reduce that slightly. Here we have the weekly FTSE going back to the 1990s. The key thing really is the peak that we saw just at the end of 2000. I've said before that a peak right at the end of 1999, a peak at that time just before New Year's Eve is what you'd expect. Markets are psychological manifestations. New Year's Eve is probably the most positive day of the year after all the Christmas spirit, etc. So it's not surprising that the markets should reflect that fact. And indeed, the Nikkei Dow did just the same 10 years before. It's been quite an interesting period, really. We've gone flashing down. We saw the great big fall, 2 years plus, then a great big rally, 2 years plus, about more than that, so 3 or 4 years. Then we've collapsed last year down to a low in 2008, 2009, and now we've bounced up once again. Now, the most obvious way of counting this is as a triangle, meaning that we're bouncing between two trend lines, like that. And the implication of that pattern is we're actually going to go a little bit higher, and then we're going to come down again. And I think that's probably quite likely. Certainly it's difficult to see any other count. I'm talking about Elliott wave theory here. See any other wave count that fits that bill quite so well. And if we look at the latest decline, which is the important thing to look at. So I'll expand this. I'll go down to a daily chart so we can see that in more detail. There's a slight delay to get these things happening. I think there's also a slight lag in information, actually. All right, that's the daily chart. Just come back to that. Now we can count this two ways. I'm counting it as 1, 2, 3, 4, and then a 1, 2, 3. 4 and 5. Elliott wave patterns come in fives. Having seen a fifth of a fifth of a fifth, which I'll show you in a minute, we're expecting a pullback. Now, this is likely. Okay, there are alternatives, but this is likely, even if we are going to go up to that top of that triangle, because having seen 5 waves up, we'd expect there to be a pullback. That's my current stance. That's what we're doing on the big call service. We're looking for the peak, and we're going to issue a sell signal once we see that peak. Now, I'm expecting a fall of at least 500 points, but it could be much bigger. It's difficult to be. You never know for sure. Once something starts to sell off, it's best to be on board, and it's best to just take what the market offers us. I tend not to use targets for that reason, in fact, because if you use a target, then you may well miss a substantial part of the move, which you obviously don't really want to do. So now I'll just go down and actually we'll go back to the triangle quickly. I just want to look at the level that if we do go up that triangle, where we might end up going to. Okay. Not quite we're getting these. I'll just try to delete it. Sorry about that. We did tell everybody to log on early, so unfortunately some of you obviously didn't do so. Okay. So if we hit the upper end of the triangle, we're going to look at a move at around up to 6,500, 6,600. But I say, I think we're going to like to bounce down first a bit, and maybe we'll see an ABC move up to that level. But the current focus is on the decline, I'm expecting. So now we'll have a look at the shorter-term chart, see if we can see any sense in what's been happening since this low here. Since this low here, we're going to actually look at, we've got a clear 5 waves up to that high. So let's have a look at this move there. So I'll go down to a shorter-term chart. That's the hourly chart. Let's expand a little bit. And I think the interesting point is, we got actually a 3-part move here, which is not too clear. This also looks like a 3. Actually, I'll get in a bit more because it's a little more. It's quite a detailed move. Okay, this is the action since the peak we've seen so far, which came in I think about 6th of January. This looks like a 1, 2, 3, 4, 5, so an A, B, and a C, followed by a sort of B wave here, and then a C wave down to here, making a flat correction. So it looks to me like we're probably going up from here. So I'd expect more upside. However, there is one alternative count, but I think we can probably dismiss it. But just for the sake of completeness, let's just have it. I mean, we could perhaps count a 1, 2, 3, 4, 5, and then a corrective A, B, C up to there, and then as far as something possibly impulsive, not very clear. Again, in fact, this rally here actually probably has gone above the lower wave 1, actually, which would negate the count in any case. But I would say right now we're looking positive. Okay, at this point I plan to give you over to Mark.
Okay.